Hello and welcome back to my channel. If you've seen any of my videos before, you'll know that my intention is to make the world of finance simpler. I honestly believe that following a few simple money principles, you can win with money. A lot of people want to overcomplicate money, and in particular, investing. If you want to be confused in this area, just spend 5 minutes searching online. There's a lot of conflicting information out there, and there's certainly a lot of people that want to take your hard-earned money with the promise of 200% returns overnight. This is why I love Vanguard. They're all about transparency and simplicity. In this video, I'm going to explain to you the LifeStrategy Funds that Vanguard currently offer and why I personally like them. But before we get started, make sure you subscribe to the channel, and if you enjoy the video, hit the like button. So before we get into it, remember I'm not a financial advisor and nothing in this video constitutes as financial advice. I'm simply a guy learning to invest in the simplest, most effective way that I can. Do not take what I say as advice, and if you feel like you need tailored financial advice, you should seek help from a suitably trained professional. So who are Vanguard? Vanguard was founded in 1975 by John Bogle on a simple but revolutionary idea, the index fund.
So it's been a revolution, indexing has. And it's changed the nature of how people look at investing.
The idea of spreading your money across multiple stocks to lower the risk and track a market or sector. An idea that now seems so obvious but was once thought of as crazy. The idea of Vanguard was that the company would be owned by its clients rather than influenced by outside owners. That means that the company serves only one person, you, the investor. Now this simple idea kept Vanguard's fees below everybody else's because they were not greedy people at the top demanding profits. They are now one of the world's largest investment management companies, and they offer nearly 349 low-cost funds and ETFs to its clients. If you want to know how to set up a stocks and shares ISA with Vanguard, follow the link above for a step-by-step guide that I made. So what are the LifeStrategy Funds? The LifeStrategy Funds are off-the-shelf, ready-made, simple funds for you to plug and play. They combine multiple individual index funds into one portfolio, giving you access to thousands of shares and bonds in one single investment. This helps reduce risk by spreading your investments. They comprise of a mix of stocks and shares as well as bonds. There are 5 LifeStrategy funds available with a sliding scale mix of ratios from stocks to bonds. These funds are also known as accumulation funds, meaning that any money returned in the form of dividends will automatically be reinvested into the same fund that you've selected. This truly automates the process, meaning you can invest a lump sum or cost average every single month with a set amount and never have to look or manage your money until you wish to start withdrawing it. Your money will just compound over time. And don't be fooled into thinking that these funds are just for the beginner investor. They're also just as applicable to the self-proclaimed investing experts. Just remember, just because somebody reads articles about the stock market and knows what on earth a stock ratio is, doesn't mean they're going to be any more successful with investing. English philosopher William of Ockham is known for Occam's razor, also known as the law of parsimony, that states entities should not be multiplied without necessity, which I think translates perfectly to investing. Essentially, why would you overcomplicate something that can be made simple? If you can achieve the same or even better results without all the extra hassle, why would you not do that? So how would the LifeStrategy Fund work? So there are 5 funds to choose from. There's something for every investor. Remember, shares typically give you a higher return over the long run, but are riskier, whereas bonds are more stable but offer lower potential returns. Having a mix of both helps balance risk and reward. You'll need to establish which fund suits your risk tolerance. Now, risk tolerance is just a fancy term or word for how scared or worried you're going to be if you log into your Vanguard account and see that your portfolio has dropped by 20%. Are you going to panic and think about selling, or are you comfortable in knowing that the stock market always rebounds and the ups and downs are just part of the long-term investing process? Now, this is something you're really going to need to think about. By getting this wrong, you may not stay the course and pull out when there's a perceived bear market, meaning that the market is heading south, or a bull market where the market is on the rise. So I did Google why they're called that, and these references supposedly come from the similar tendencies between investors with the financial market and the attributed animal. A good saying in the world of diet and fitness that will help you here is the best diet is the one that you're going to stick to. There's no one size fits all when it comes to dieting or investing. It's personal because, it's called personal finance. Everybody is different, and this becomes no less apparent when it comes to choosing a fund to invest in. If you're terrified of seeing your investments dip, then you may be better off weighting your investments towards bonds. And if you're happy with volatility and can take a bear market with ease, then weight your funds towards stocks. So let's have a look at the funds. So the funds are named very appropriately. The number in the fund name relates to the percentage of stocks or equities within it. So the LifeStrategy 100 fund comprises of 100% stocks or equities, and the LifeStrategy 20 comprises of 20% stocks and 80% bonds. So Vanguard will also take care of your asset allocation, so there's no need to ever worry about rebalancing your portfolio every year. Rebalancing entails selling either stocks or bonds to rejig your allocation back to what it was for your desired percentages. And in this particular case, whatever the LifeStrategy number you chose. You need to remember that your stocks and bonds won't perform in a linear manner, so the value of your stocks and bonds are naturally going to change, therefore changing your asset allocation percentage. The asset reallocation process is often laborious but necessary if you don't have a fund that automatically does it for you, as Vanguard do. So Vanguard also uses the same sliding scale when it comes to investment time frame, suggesting that the less time you plan to have your money invested, the higher bond allocation you should have. They also have a separate collection of funds called target retirement funds, but I'll go further into depth of those in another video. So let's take a deeper look at one of the funds. I've chosen a LifeStrategy 100 because I like it, and also because I invest in it. To take a look at all the other funds, I recommend heading over to the Vanguard website to check them out in depth. So for the LifeStrategy 100 overview page, this is what you'll see. So starting on the left, you'll find the chosen fund share price, then the equity allocation, in this case 100% stocks. Then you'll see the charge that Vanguard will take, which is 0.22% for all LifeStrategy funds. And finally, Vanguard utilised the synthetic risk and reward indicator, or the SRRI, which is used to calculate the relative risk of a fund from 1 to 7. In the case of the LifeStrategy 100 fund, it's a level 5 on this scale. So the past performance of the fund looks pretty impressive since its inception in 2016, with a low in 2018-2019 of 2.37%, and its highest to date of 33.7% returns in its first year in 2016. Although this fund has done well, it's important to remember that past performance is not an indication of future returns. Saying that, I know I wouldn't feel comfortable investing in a fund that has lost money every single year since it began. So as you can see with the allocation breakdown of the fund, it's a globally diversified but clearly heavily weighted towards the UK market fund. This tends to put off many people as the UK market only makes up 4.1% of the global stock market. Yet the US stock market makes up a gigantic 55.9%. So based on that, I can see why people would rather weight their portfolio more towards the US rather than the UK. But the fact is, there's still 35% of this fund invested in the US stock market. So finally, let's take a look at the LifeStrategy Fund fees. The fund management fee is 0.22%, and Vanguard have a fee just to have an account with them of 0.15%, with a total fee of 0.37% for the LifeStrategy funds. And as you can see, the average fund with Vanguard is 0.2%, so the LifeStrategy Fund actually charges you slightly more than the average. This, in my opinion, is a very small price to pay for the convenience that you're going to have of a fund that literally does everything for you. So, to conclude then, in my opinion, the LifeStrategy funds make a great core investment for any investor. This is somewhere to put the bulk of your money invested, knowing that everything from asset allocation to reinvesting will be taken care of. If you're a beginner, these funds are great. And if you're an experienced investor, these funds are also great. Thank you very much for watching, and I'll see you next time.